Hey there, welcome to the video. I'm Scott Welsh, and as you know, we get together every Thursday, talk about trading systems. I'm in a different part of my office, so I'm a little freaked out right now. It's going to be way different experience. But anyway, today we're going to talk about big moves and where they come from. Now, I talk a lot about scalping systems, systems that take very small profits. I really like that. I really like the high winning percentage. But I'm also concerned about that. Even though I do love those systems, there is an element of execution that becomes a big part of those. If you're scalping, let's say, for 10 points, and you get bad execution for any extended period of time, I found it in my own trading that that can be a problem. If you want 10 pips, you start getting 7, 4, 3, or not at all on a big spread, you get a break even. That's a real problem for a scalping system. Big moves get rid of all that. Besides the fact that when you get a move, your bank account or trading account really goes up. But I love small systems, but we need to really talk about counter trend moves and specifically moves that move a ton that can make a difference. So let's get right to it. 3 things today. We're going to talk about where big moves come from. Number 2, if you're looking for big moves, is a counter trend system the way to do it? Or should it be trend? Which is better? We'll talk about that for a second, and details on a counter trend system that I'm going to show you in the video today. There's a disclaimer. These results are hypothetical. As the beginning of my research on this topic, I think it's turned out it might be an exciting topic for us to discover together, but it is hypothetical and don't risk money you can't afford to lose. Okay, where do big moves come from? If we decided we're not scalpers and we want to make a lot of money per trade, we don't mind stopping out, we don't mind a low win percentage, well, then where do they come from? Where's the best place to go to get these big wins? And how do they go, right? Are a big move a 10-year, 12-year move that gradually ticks up and the chart just slowly moves like a Dow Jones stock, and it over time, if I bought and held it for 22.8 years, I've quadrupled, quintupled, I don't even know if those are words. You made a lot of money, right? Or are big moves sudden and violent? Now, I'd love to hear your answer, but my answer is probably leaning towards sudden and violent. It's going along and, oh, the trend is up and interest rates are never going to change. And then, wow, the Fed surprises. Or a company is going along and things are great and boom, they're not doing great. Same store sales came in, they were awful, right? That is a shocker, right? So if we're looking for shockers, sudden, violent moves that were unexpected, well, where does that come from, right? So let's look at what trend followers would say first. What would a trend follower say the big moves come from? Well, a trend follower only buys things that go up. So a trend follower would answer this question saying, well, you wait for it to make a new high for the year, for the week, for the month, and then you buy it. But that might be a shock that something that's been going up goes up even more and substantially, but it's not really a shock, right? It's in the same direction. I guess it's shocking that it's so fantastic when it was just mildly fantastic before, but even though it might be a shock and the move might be extraordinary, that's not really what I think maybe the big moves come from. At least that's the hypothesis I'm under. My hypothesis says that it's the opposite of what trend followers would say. It's the opposite of trend following. It would be not that things have gone up and they're going to continue to go up explosively. Things have gotten terrible. Things are going down. It's never going to turn around. And then all of a sudden, some report comes in, economic report, and now we go crazy to the upside. That's my hypothesis. Again, the trend followers would say otherwise, and they'd go hunting these big moves on things that have already moved up, or go looking for big shorts when things have already moved down. But we're going to specifically look at counter trend. Why? Again, because my hypothesis is that this is where it comes from. Think about the stock market in 2008, 2009. It was scary. I remember being scared to be in the market, so scared that I was out of the market during this time. But it went down, and it was just everyday thing. Like, when is it ever going to turn around? And then March 2009, it got better. and then it got better, and then it really, really, really got better. And it started a bull run of multiple years. But look at that chart. It was going down, 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 and then all of a sudden, boom, up. And it stayed up, and it was really consistent up. Hard to be positive in that time of trading, of course, but if you were, it went crazy. Down forever, and then change of economic reports, and then boom, up to the upside. Plus, think of all the firms, people selling you stuff out there that trade on earnings surprises. If you're a stock trader, you love earnings surprises. Well, they forecasted it would be terrible, but it is not. Stock shoots up. Or vice versa. Stock is rising. It's a darling of Wall Street, and then they have one bad quarter and it goes straight to the toilet. That is the paradigm of what we're talking about this week. That's the backbone. We think things are this, and then, whoa, right? But doesn't that make sense? If things are shocking, everyone thought it was going one way. When it starts going the other way, there'd be panic. There'd be orders in place. Oh, my stop loss way out of the market. Now it's traveling back down toward my stop loss. Oh, I got to get out. Oh, wait, this is terrible. Oh, it's going to go to zero. Oh, I'm going to lose all my profit. Panic, panic, panic. Violent, violent, violent. Quick, 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 big moves. Okay. Now you know the background. I think it makes sense. I love trend following, but that's not where we're hunting today. So I'm going to show you again a simple counter trend system that we've talked about many times. And right now, that system, I call it the weekly pivot. A weekly pivot point is the fair value of any instrument that particular week. And that particular level is set in stone, and it never, ever goes away. And for 1 week, and 1 week only, actually, it lasts longer than that. But a weekly pivot, that stays in time, and that is fair value. So let's trade back to it, because price reverts to the mean. That's a universal truth. And we're going to assume that it reverts to the mean and then keeps going. Now, this particular system waits for price to get away from fair value to an extreme level, and then we trade it back down toward fair value level. I've done a ton of testing lately, and it works great for a small scalping move. We've talked about that. But I wonder, does it work for a big move too? Why am I stopping so soon? Yes, I'm getting a small slice, but can I get a bigger slice? So that's what we're talking about this week. And ta-da, here it is. We're talking about the euro dollar because it's probably the best Forex currency pair to start your testing on, right? I've argued that. The weekly pivot system, and we're going for a 150 pip move. That is a pretty big move, am I right? This on your chart you see is the weekly pivot. There's the next week's pivot right there. You can see on the chart, and this is a trade from 2019, price usually runs back to fair value. It usually reverts to the mean, but it didn't here. Something happened later in the week, and price rocketed up. And when it gets to this level, my hypothesis says that that's too far, it's going back to fair value. This is too far, it's going back. Price shot up, the robot entered the trade, and euphoria kept on for a while, and then people realized, hey, listen, this is not that big of a deal. We need to get back to fair value. We need to get back to equilibrium. And price, after this big shock, shot right back down, then kind of went sideways, right? We're thinking about the weekly pivot, and then rocketed back down. Somebody changed their mind, but we're going for even more than that. And we let it go sideways, and then it finally fell to 150 pips. You can see here, notice when the week ended, we did have a little bit run back to fair value, an early week run, do you see? But then that died down and it went back. Whatever happened here, nope, they changed their mind. That's not going to stay. And price went down. That's a 150 pip move, and that's what I'm hunting. And I'm hunting it specifically in a counter trend nature. It's clearly going one way. When it reverses, we think it can be violent the other way. Make sense? Here are the details, and it's easy. I just waited for 114 pips of distance away, 114 pips up, and then I went for 150 pip move. Told you that, and the stop loss is 110 pips above your target, right? We trade this, and we look for this trade on the euro dollar every single day, but not on Tuesday. Tuesdays we take off and we go to the beach. Got it? Really complicated system. I obviously do robots to trade. This is something that a manual trader could do quite easily, right? Just put your orders in. So how does such a thing do? Well, going back to 2003, with 99% data, of course. I'm sorry for showing these MT4 reports. I know the type is small. I don't know how to make them bigger, and it makes me angry. But here's the report anyway, because I wanted to show you. At $49,625 in profit, if we trade one full lot, that's what that says, 49,625, and your max drawdown is 15 grand 494. That's what that says. You can see that the winning percentage is 44% for shorts, 51% for longs. Pretty decent considering we're getting much more than our stop loss. Profit factor is above 1. Okay, it took 366 trades, so we have a decent sample size, right? This is not a shot in the dark. This happened quite a bit, not a million times, but it happened quite often, at least often enough for me to consider it. Okay, now what does that mean? Look at the equity curve. What does this look like to you? Yes, we're stopping out. We're only winning 51% or 44%, but look, what a nice gradual climb. Dip here early back in 2003, 2004. But is that even really trading back then? I don't know anyone who traded Forex regularly in 2003. But anyway, after that, we had a rise. Then we had a little problem here, a little drawdown, another rise, slight pullback, and then look at lately, right? Last couple years, been skyrocketing. Lots of movement in the euro dollar lately. And again, I didn't really optimize for this. I had a 150 dip in my mind. And I had those other numbers just from previous testing and just kind of, so I didn't do a lot of optimizing. I guess that's my point. And seemed to work out pretty well. So bottom line is this. First, why don't we trade Tuesdays? Well, I did test the days of the week. I didn't test the parameters that much, but I did test day of the week. I was thinking this might be an end of the week strategy, but it turns out that you can trade it every day but Tuesday. Why? Here's my guess. Fed announcements in Forex come out on Wednesdays. Those are usually shockers. If you're in a trade on Tuesday, that might get stopped out by a weird announcement on Wednesday. Or it just could be statistical nothing, and it's pointless, and it's stupid, and you should trade on Tuesdays. But that's my fundamental guess, and the data said don't trade Tuesdays. But those results look. Well, to me, looking at that equity curve and seeing 3 times the profit as the maximum drawdown, to me, I don't know how you feel, it seems to show that big moves can come from countertrend, that trend followers may have a point, but countertrend followers may also have a point. And it does confirm my hypothesis that when something decides to turn, it tends to turn with vigor. Love saying that word, right? It tends to turn with some power, okay? Now, as I mentioned, this is just the start of my research, but I was fascinated by it and wanted to share it with you in our Thursday video. There'll be a lot more on this, more currency pairs and more bells and whistles. This is a real basic run through, but pretty darn good for a basic run through. All right, you can always go to my website, scottwellstrategies.com, become a member, get all the robots. I do have a lifetime membership, which means you don't have to pay for anything ever. And you can also join the free newsletter going to scottwellstrategies.com. Okay, that's all for this week. We'll be back next week with more good stuff. Bye for now.